We have Taiwanese index up around 1.7%.
I think they're going to 4% hell or high water if I had to put it into two boxes. They are data dependent, but that's why they're going to 4%.
IT, for example, this point on Friday as well, is perhaps in for a bit of a tactical rally. It may still be in a bear market, but it's showing signs of a double bottom and tactical buying.
We still remain a little bit more cautious. I think the macro risk still persists.
I think Google experimenting with fantasy games and rummy games on Google Play is a positive step in that direction.
They say that the company is a strong play on India's defense aerospace capex. It has a robust revenue visibility for the future.
66 points higher now on the Nifty.
Now with the global setup quite strong with the kind of rebound that we've seen late last week, it does seem that very, very soon we will get past that number of 18,000.
Brahmastra has been a sigh of relief for the film exhibition industry as a whole.
Across 14 issues, more than 600 applicants have been finalized and they have started investing on the ground.
The CNBC-TV18 poll is expecting a 6.84 reading as the August CPI number.
The recovery has been robust and the economy is progressive, and that stable environment does well for businesses.
The Nifty has continued its momentum. It's up around 0.7%.
Good afternoon and welcome to Closing Bell. I'm Anuj. With me, of course, Prashant and Nigel. And this really is a market all about momentum. This is a market in which you're seeing big gains. We are all set for 18,000. Let's see if we can do it in the last 1 hour, or we have to wait for tomorrow's gap up, because these days it's all about gap ups, right? Big rally in IT stock for second day running, something we spoke about in the morning as well as a possibility. Reliance doing well, broader market doing well, the mid-cap index moving within almost 3% or less than that of a new all-time high. It's almost like a Goldilocks scenario playing out. We don't fall on the day the global markets are down, and we outperform on days when global markets are up. What else can you ask for, right, Prashant and Nigel?
I mean, don't know what to say, right? Just up and up and up and away. And, you know, Anuj, by the way, the highlight of the show, of course, is that Nigel is celebrating his birthday. And, you know, I must tell you, before we started the show, the program, Nigel was analyzing a company on Inside Out with the name Navneet Education. And I and I noticed a glint in his eye and a spring in his step. So happy birthday from all of us, Nigel.
Thanks so much. Yeah. Thanks, Anuj. Thanks, Prashant.
Happy birthday, Nigel. Happy birthday, Nigel. I wish I was there. Happy birthday.
Thanks a lot.
I missed the cake. I missed the cake, Nigel. You know, you owe me one when I come back.
We'll do a couple of drinks as well, Anuj. You know, on the Navneet story, Anuj has tracked that story developing for many, many years. So, you know, that's lovely. But good day for the markets.
Yeah, absolutely. Good day, great day. And, you know, looking just, I mean, one way. There was initial hesitation, maybe you can call it that. But after that, no looking back. As we begin this edition of, you know, closing, maybe there is one more leg coming, but these have not lasted. You know, 20, 30 odd points here and there, and then the market comes right back with full vigor. So 17,947 is where we find ourselves at. Take a look at the sectors which are doing the best. It was IT in the morning. It is still very much the IT index. I mean, by way of sheer weight, it's contributing the most, 1.6 higher. Real estate is up 2%, the index itself. We had, I mean, the management of Prestige earlier in the morning with us talking to us how the cycle looks very, very solid, intact. And of course, small caps as a pack, 1 1/3% there. So some of the drivers which got this kicked off in the morning, still very much right there in the driver's seat. Nigel.
Well, we'll talk plenty of stocks in the next 60 minutes or so, and maybe 18,000 is on the cards for today. Let's see whether or not that happens in the next 60 minutes. First up, let's run you through what all we have lined up on the show for you. It's a good start of the week. The Nifty and the Sensex, both of them gaining close to around 0.5%. Consistent outperformance by the broader markets. Realty and IT stocks, they lead the charge. Why the big move in specialty stocks? Well, we'll get in. Rohan Gupta of Edelweiss Securities, he'll join in to give us his comment on the sector. And HAL and CAMS, they're gaining in trade after brokerages come out with bullish stance on the stocks. We'll get you further details on that. IDC's Sanjeev Puri tells CNBC-TV18 that inflation is a big risk going forward, adds that premiumization and down trading are happening at the same time, even as he is hopeful of recovery in the second half of the year. Excerpts from the exclusive chat we had. That's scheduled later on the show. And a detailed chat on markets, the way ahead for our markets. Alpha Manager of the Day, Anshul Sehgal of Kotak PMS will be joining in.
Okay, but as always, we start the show with last hour calls. Mitesh Thakkar is joining us for that. Mitesh, hi, good afternoon. Big move in market and IT, something you also alluded to in the morning. But your view for the last hour and your stock calls.
Yeah. Good afternoon, Anuj. I think a very big move, and we are back there where we had made the last swing high. But importantly, Anuj, I think on the index, we are now trading above the weekly trend line, which is if you join all the highs which the market has made in the last 1.5 years, it's above that. Though I think this is start of the week, this is not closing of the week, so we don't know whether at the end of the week we'll be above this or not. But very important that we have finally started to capture that level. I think that only suggests that eventually we should head higher and at least, if nothing else, test 18,250 and then possibly even try 18,360, which was the highest weekly closing. Eventually, once that is cleared, 18,600, the recent swing high should be tested. So stay positive. IT, you have rightly mentioned. I think that's something which I believe has just started. We've had about 4 days of rally, so typically you get a 1-2 day kind of a pullback. But IT stocks and the Nifty IT index chart suggests that there is a significant upside left for them in the near term. So Nifty IT, I think the first target should be closer to about 30,000, and it's at about 29,200 right now. And then eventually I'm looking at a target of around 31,500 plus. So there's a good amount of trading pop left here. Even in the IT stocks, I think very positive chart structure. Disclaimer, we have some positions in IT names. That apart, the calls for the hour, I have a buy on Z. That's breaking out, making a fresh swing high. So buy with a stop just below levels of 264 here and a target of 285 can be looked at. The other one is Atul Limited. That's breaking out very strong price and volume action here as well. So that's a buy with a stop below 9,400 for targets of 10,000.
Okay. Dilip Bhatt is now joining us, owner and MD of Prabhudas Leeladhar. Dilip, hi, good afternoon. What are your thoughts first on IT? Because you're seeing a strong bounce for the last 3 or 4 days now. Do you reckon this is just a sort of a dead cat bounce, or is this start of something big?
Well, I think we all know that IT and pharma are the two sectors which have considerably lagged behind in the last 1.5 years, and more so in the recent times, despite the index showing a good movement. So I think IT was one of the sectors which we had been telling, IT and even pharma, as what I am trying to say right now, that these are the two sectors which hold out a very good hope for a good rise in some of the counters in IT as well as in pharma. And one should not forget that the rupee tailwind, the rupee depreciation tailwind is very strong and solid, and which will take care of a lot of other problems for both the sectors. So I think all said and done, yes, IT looks good for a sustained rise, at least for some time to come in the near term. That's what I think.
Okay, hi Dilip, good afternoon. Thanks so much for joining in. Dilip, what about ACC and Ambuja Cements? There was one thought that maybe that open offer is out of the way. There are some people who are trying a short trade. I think that's what's resulting in a bigger up move. The street believes that there's going to be more amount of inorganic growth out there. They believe that savings is going to come about. They're going to cut down on their cost and bridge that cost gap that they've had with Ultratech, with the Shrees as well or the like, and maybe get a better multiple as well. What's your take? ACC is flying away as we speak.
Nigel, let me wish you many happy returns of the day.
Thank you.
And I think coming to ACC and Gujarat Ambuja, I think without any doubt in this sector, one thing you must say that the cash generation throughout has always been pretty good. And the ROEs are also pretty decent, if not good. So I think it makes for a very good combination, and the very fact that cement continues to be a good sector to play for the future, and with the Adani's being in the driver's seat in both the companies, so I think I would say ACC as well as Ambuja are poised for a rise for a variety of reasons, maybe because of the change in the management, because of the proactiveness of the management. I think all those things will play out somewhat initially, and maybe the fundamentals can follow very soon. And as what you very rightly said, the inorganic opportunities will continue to be on the radar. So I would say that though Ambuja and ACC...
Brokerage house Motilal has come out with a note. It's actually initiated coverage. Vahishta is here to tell us what Motilal is saying. Vahishta, over to you.
Hi, thanks for that, Prashant. You're right. Motilal has initiated a coverage on CAMS and they've given a buy rating for the stock with a target price of 3,000 rupees. They've said that CAMS has a 70% market share versus 64% which was in FY15 and is a leader in India's mutual fund registrar and transfer agent industry. Now, with the mutual fund penetration which is quite low in India at approximately 16% as against the global average which is much higher at 63%, Motilal expects a strong 15% CAGR in the assets under management for the industry in the coming decade. Also, the account aggregator business has the potential to revolutionize lending and financial planning, which is the way UPI did for payments. You can expect the mutual fund business to register FY22 to FY25 CAGR for revenue of at approximately 13% with 15% CAGR in the PAT, while the operating margins could remain flat. And the ROEs are expected to touch 45% by FY25. The dividend payout is also healthy at approximately 65%.
Okay, all right. CAMS in focus, stocks doing very well. Dilip is with us. Dilip, the largest player in the in that segment, mutual fund transfers, mutual fund accounts, basically keeping a registry of things. There are others like depositories like CDSL. Do you like anything in that space, Dilip?
I think this entire space looks very good and exciting, largely because we are going to see a very sustained growth in the overall numbers, in the volume terms, in the number of accounts. And apart from being a good sticky annuity business, this is a business which is also going to show a good growth. So I think some of all the companies within this particular sector will continue to fare exceedingly well. I think they may show a growth of around 20-25%, but possibly what is more important is the ROEs and the cash generation is going to be excellently good. So I think certainly this merits a look, though not to forget that these are not really very cheap. They are reasonably expensive, but considering the prospects, I think a lot of it has been discounted, but still the growth continues to be very exciting.
Okay, all right. Keep an eye out on the broader markets. A few stocks are really bucking the trend as we speak. Salon Exploration, just pull up the intraday chart out there. That stock is flying away as we speak. Big uptick is what we're seeing. Repco Home Finance as well. That stock is moving well and volumes as well have picked up on that particular counter. And Welspun India, that's the other one that's seen a bit of an uptick. So the real action, I think, is in the broader markets as the Nifty drifts towards that 18,000 odd mark. For the time being, let's shift focus. We're CNBC-TV18 exclusive then. Speaking to Shireen Ban, ITC's Sanjeev Puri tells CNBC-TV18 that inflation is a big risk going forward, adds that premiumization and downtrading are happening at the same time, even as he is hopeful of a recovery in the second half of the year. Let's hear him out.
Inflation is a concern, but that's more limited to the consumer side, where we are continuing to see growth. Yes, there is, of course, a stress that you alluded to in the beginning also as far as margins are concerned. But having said that, let me also say that, despite the severe inflationary pressures, last year we were able to sustain or little bit, in fact, increase margins. And so far we've been able to more or less sustain it through a mix of actions. The target that we have set for the hotels business is we must at least do one property a month, and we are getting good interest amongst owners of assets in India, and also there is interest beyond the Indian borders, which we are starting to explore. And really the target is to do one a month, so we are quite buoyant. Most categories are ultimately going to be omni-channel. D2C brands have developed some interesting propositions which are good to build on the D2C platform, right? Unique spaces. And some of them have very interesting ideas. So the spaces that are of interest to us, like mother and child, right? We will invest. We've done Mother's Purse, we've done Milo. So we are right now, of course, a financial investor. And as and when, the founders wish to divest and there is an opportunity and it is working out well, we have the option of, acquiring it.
Okay, that's ITC being the stock of the year, Dilip. Any views here now after the big rally?
I think one should stay put in ITC without any doubt. While rightly flagging off the inflationary concerns, I think all said and done, if you see the product mix that they have, and if you see particularly the cigarettes, I think any increase in the prices, most of it flows straight into the PBT. And we all know the kind of the cash generating machine that the cigarette business is, and which is also funding their FMCG aspirations as well as the hotel aspiration. And both the businesses in the coming time should do good. So I think looking at the fact that you're still going to have about 30% plus ROC for the company, a good cash generating machine, and a good dividend payout, I think even from the current levels, ITC holds out a very good promise of at least about 40-50% on an annualized basis for next 1 or 2 years. I think ITC looks great.
Okay, pretty clear on that. Then Dilip, ITC looks great, smoking hot this year. For the time being, slip into a short break. But on the other side, we'll focus on another space that's buzzing around, the specialty chemical space. Rohan Gupta of Edelweiss Securities will be joining in to tell us his view on the sector. Post that, we'll also get a chat going on the markets. Our alpha manager of the day, Anshul Sehgal of Kotak PMS, will be joining in.
Welcome back. 118 points is what the Nifty's got, 17,952. Dilip, thank you very much for staying with us. Dilip, of course, of Prabhudas Sridhar. Let's welcome in somebody to talk to us about what's happening on the specialty chemical space, the entire chemical space, which is doing very well, actually. So, we've got Deepak Nitrite, which is up 6%. Just some of these names. Naveen Fluorine. Deepak Nitrite, of course, is, coming off very, very sort of oversold kind of levels. Naveen Fluorine, no such problems. I think it's pretty close to or at a new high. Naveen Fluorine, that is 46.23. There is India Glycols, which is up about 5.5%. Atul Limited is up about 3.5%. Bodil 3.5%. Aarti Industries is up almost a full 3%. And so on and so forth. And there are smaller names like Vishnu Chemicals, etc., which have done very well recently, but are up just about 1%. Balaji Amines, for example, is another one which went up 5% on a Friday. It's up Thursday or Friday, and it's up another 1.5% right now. Rohan Gupta is joining us. He's Director Institutional Equities at Edelweiss Securities. Rohan, good to have you with us here. Thank you very much. Are there any specific triggers here, or is this just rotation that we've seen? Some sector gets ignored and then comes back into rotation when, I guess, markets or market participants run out of ideas elsewhere. What's going on?
Yeah, hi, good afternoon. So, yes, you are right a little bit that, yes, this sector has been slightly ignored in last 1.5 months when overall market rally, if you see that from almost 15,000 to 18,000 in Nifty, the sector hasn't participated much. However, the specialty chemical has been a buzzword from last 3 to 4 years, and the stock has been doing very well. There have been definitely many drivers. All those drivers still remain intact with the China plus one, and in the current scenario, what we're talking about, the energy crisis which Europe is facing, that is further structurally positive for all the chemical sector. So yes, you are right that the stocks are buzzing, and I think that more of the action which we are seeing right now in the late participation of these stocks, not any very specific sector update which has emerged in last, I will say 1 week, but yes, the stocks are participating.
Okay, all right. Hi, Rohan. Good to speak to you. After a while, we're catching up. At one point of time, it seems some of these stocks ran ahead of themselves. Then they paused. As you said, they were ignored for a bit. Now, from this juncture onwards, what's your top buy call? Which has a bit of support. I don't know whether you could call any of these stocks valuation support because some of them have really run up. But what's your top pick from the space?
So, Nigel, you are absolutely right, and good to see you also after a very long time. Those stocks or those high multiple or not. So, definitely that story of the chemical, though it is structurally positive, people have been doubting on time to time, and that's what has also led to pause in this sector. You are right that some of the chemical names and some of the chemical stocks are trading all-time high multiple, and the valuations are crazy across the sector. But I think it's the growth visibility which one should focus on rather than the valuation. If you ask me, I'm structurally positive for the sector for next 5 years to 10 years. And that is also getting reflected in all these companies' capex plans. So if you hear SRF, Aarti, Gujarat Fluoro, Aarti Industry, everyone, all these companies are talking about a very aggressive capex plans, which is almost 3x of the size of last 5 years they have spent. So there is a huge growth opportunity. Yes, still some stocks are still trading at an attractive valuation, like Deepak Nitrite, Jubilant Ingrevia, Anupam Rasayan. Some of these names are trading at an attractive valuations, including Aarti Industries. Some of the names are trading at a high multiple, like Navin Fluorine, SRF, PI Industry, specialty chemical name like Fine Organics and all. So some names are trading at a very high multiple, but yes, people are just factoring and just positive on a growth opportunity. So my pick from here, definitely I'm positive on entire sector. Deepak Nitrite, Jubilant Ingrevia, Galaxy Surfactants, Aarti Industry, these will be few names where I'll be more comfortable on the valuation front also.
You know, is it a specific chemistry skill set which would matter? Is it bulk versus very specialized chemicals? I mean, how does one kind of analyze these companies, or how are you doing it? I mean, you named 4 names for us. Or is it just, I mean, you track the entire sector, of course, so maybe valuations are more attractive here with the names you mentioned.
Exactly. You are right that rather than focusing on any particular specific chemistry, I'll be focused more on the entire specialty chemical basket. All these companies, irrespective of the chemical chemistry or the customer set or the user industry, all these companies have a huge growth opportunity. That's what I'm betting on. That's what I say, that there has been favorable or positive development has been happening, including very recent of Europe. I think that a Europe energy crisis is going to have a significant impact on a global chemical industry. We are talking about China +1. I think that Europe in a short term can be a major disruptor, which will benefit many of the players, including Deepak Nitrite and many fluoro players, and many of the agrochemical suppliers like PI Industries and SRF are going to see the benefit of that. So I am not very particular about a particular chemistry. However, yes, fluorination as an space is an interesting space, offers a huge opportunity, and players like SRF, Navin Fluorine, Gujarat Fluoro, all these players have benefited from that. But I think that one should not focus much on the chemical chemistry and focus on valuations. And I think that the story here in chemical should be that stay invested in good companies and remain there for a longer period of time rather than getting in and out jumping from the one company to other.
It's good hearing your thoughts, Rohan. I think the short point that you're making is, the pathway is pretty much clear. It's a longer runway is what you believe. There's a bit of a, tailwind that's playing out. It could be structural in nature. So hold on to some of these stocks that you mentioned with a longer time frame. In the short term, well, things could move around. Thanks so much for joining in, Rohan, and giving us your quick thoughts. For the time being, let's focus on HAL. Well, that's the stock on our radar. Brokerages have initiated coverage on the stock. Vaishta is with us to tell us more about the report that's covering this one. Vaishta?
Hi Nigel, thanks for that. Well, Hindustan Aeronautics has actually had a very sharp run-up in its stock price. It has been a strong beneficiary of the defense indigenization theme which is at play in India. So today itself the stock is up nearly 7%. In the past 1 month it was up 14%, 6 months it was up 90%, and year to date it has been up, it has more than doubled for that matter. So in terms of valuations, at 21 times its FY23, 19 times FY24. Let's look at what has been the shareholding pattern for the company. It's a very tightly held shareholding pattern that they have. Government owns a little over 75% at 75.15%, while mutual funds hold 7.5% and FIIs hold another 5.5%, which cumulatively already accounts for 96%. Now let's look at what the brokerages have to say. Morgan Stanley had released a report on the stock a few days back, and they had a target price of 2,655 rupees, while Antique Stock Broking has a higher target price of 3,140, and they've initiated the coverage on the stock today, wherein they say that this company has been a strong play on India's defense aerospace capex. The company has a robust revenue visibility for the future. It has a strong order book in excess of 84,000 crores. Also, it has a strong pipeline to ensure the long-term growth. The exports are also emerging as the newer growth driver for the company. From FY15 to FY22, there was a CAGR of 31%, and today the exports are at 130 billion rupees. So definitely a good thing for all the defense stocks, not just for Hindustan Aeronautics.
Vaishta, thanks a lot for that. Dilip Bhatt is still with us. Dilip, it's been a one-way move for HAL. I remember at 1600, the talk was that there will be an OFS, and a lot of people just didn't participate. And from that level, it's gone up another 60% or so, thereabout. What's your view?
Well, I think if you see, Anuj, in the last couple of months, we have seen all the right kind of noises being made for the defense industry. We have also read a lot of reports about how the exports have picked up, especially the light combat aircraft, where the exports are going to be to some of these Asian countries. So I think in terms of the noise, I think it has all made the all right kind of noises. And of course, it is not just the noise. We are also seeing the order book, which has grown up quite well. Now the question, I think in this run-up, and to a further run-up, I think some of the hiccups could be that maybe there could be some OFS, could be some offerings by the government, as government also is in a need of funds and they need to divest. So I think all those things will come into play, not just for HAL, because they're already holding 75% in this, and they could certainly look for dilution maybe over next 1 year, 2 years. So that tap could remain open, not just for HAL, but also for so many other companies within the PSU space catering to the defense segment. So taking that into account, I would not be too keen to participate from the current levels. I mean, I will not chase the stock. I think one should wait for a while. Maybe in the OFS, which possibly could follow, one could get at a much better prices. And maybe that could also act as a cap for an upside run for the stocks.
Got it. Dilip, thanks a lot for joining us. Have a good evening. Next up, we have Anshul Sehgal joining us. He's the Head and Executive Vice President at Kotak PMS. Anshul, hi, good afternoon. Thanks for joining us. There's been a very sharp rally that we have seen from the recent close. Initially it was dismissed as a bear market rally. But now, we were so close to all-time highs, not just on the Nifty, but also in the broader market. Your thoughts?
Hi, afternoon, Anuj. Yes, that is true that there has been a significant rally of late in the last 2 months. But we have to bear in mind that between, the 9 months prior to June of this year, we've seen nearly $33 billion of FII monies go out of the markets, and the market still held up quite well. We were down probably 6 to 7%. Compare this to 2008 period where you had as much as $9 to $10 billion go out, and yet the markets were down 52, 53% from higher levels to lower levels. That tells you that the domestic investor has come in with gusto, and he's really been a pillar of strength for this market. And he's come of age. Now, when FI holdings in India are at about 17.5%, 18%, we've got to take our bets as to whether there is further downside in this holding or there is likelihood of upsides to this holding going forward. Lo and behold, between July and August, we've seen as much as $7 billion of purchase by FIIs. And in our judgment, room for FII buying is definitely higher than FII selling in this country. Look at any competing market where FIIs have the option to go to, whether it is Russia, China, Taiwan, Latin America, unlikely that they will buy just as aggressively in any of those markets. So India, in that sense, stands out. And there is still a lot of skepticism in the market. People have not participated, and they are holding back in the hope that the markets will fall. I think that this is a setup for the markets to really not give in to that expectation and, in fact, belie that expectation to the upside.
Yeah, I mean, that point about EMs in India, I put that up at sort of put out a detailed presentation about a week back. Anshul, great to have you with us here. Thanks very much. Afternoon. Just imagine the scenario. Market here goes up another few percentage points. We're at all-time high, maybe a week from now. And world markets, US markets, they're still down 15, 17, 20%. How does one describe that kind of picture, Anshul? In terms of, would that be okay? I mean, how would you describe that? And what would that mean for future returns from there?
Hi, Prashant. You see, money finds its route and its way. You will recall that in the period 2010 to 13, when the US markets as also developed markets were going one way and up, India was going just the other way, particularly in the broader markets in India, and India was going down. That is because the market sensed, and markets don't have an agenda. Markets are very clear that they're looking for correct economic activity, healthy economic activity. And they sensed that the Indian economy was tapering downwards. Inflation was up, current account deficit as also fiscal deficit were expanding, and hence India was punished. While on the other hand, many other emerging markets as also the developed markets were benefiting at that time. The situation has turned on its head as we speak, because money has found its way. Money has realized that India is in a far better situation today than it was in the period 2013. That our current account deficit has been in check, our fiscal deficit has been in check, and our inflation has been in check at a time when developed markets and other emerging markets are hurting on all these counts. Healthy scenario for our economy and our balance sheet is being given a thumbs up by the markets. We sense that if growth continues as we anticipate, and I must tell you anecdotally, I have been meeting companies in the last 2 weeks in conferences, and the body language that I see of many of these companies is unprecedented. I haven't seen this body language in the last 10 years. Of course, numbers are strong, but the growth estimates that these companies are giving for the next 2-3 years are so robust that if those numbers do come through, this market at this level will look like an opportunity. And if you don't invest, 2 years hence, an opportunity lost.
All right. Hi, Anshul. Valid point you make out there. You've been meeting a lot of investors. You have a pulse and you have a view as well on the IT space. A couple of technical guests joined in today and they were saying maybe post that correction, IT seems to have bottomed out with a longer time frame. Are you in that camp, or do you believe that the globe is still in very uncertain times? So you'd prefer to stay away and not get into these IT stocks, some of which have re-rated big time. Your take.
Hi, Nigel. I am in the latter camp. We've been underweight IT for most of this year. And our belief is that, as you rightly mentioned, the globe is uncertain. These stocks have re-rated meaningfully. Even after the recent derating, many of these stocks are still trading probably 15-20% higher than their long-term averages. It will take some time for this to get adjusted. Also, it will take some time for the markets to get adjusted to the new growth reality, because in many of these companies, growth has tapered off from expectations at the beginning of this year, and costs have moved up because manpower cost in this space has just gone up meaningfully. That contraction in revenue growth estimates, as also margin estimates, will take some time to be adjusted. And I'm a believer that this space in the near term will be not outperforming the India-centric plays. So I would be more constructive on India-centric plays than global-centric plays as we speak.
Okay. What about the automobile space? Because that's the one pocket where we had the biggest rally in the last 3 months.
Anuj, that's right. In the auto space, again, numbers are talking. In many companies, waiting of their products is as much as 6 months to 12 months. In many instances, people are willing to pay extra to get the products in advance. Now, this is again a scenario that I haven't seen in the last 5-7 years. And this is despite the raw material costs having gone up. Of course, of late they've come off, but still they've been high for most of this year. Despite that, this is the kind of demand scenario that we are seeing. This only bodes well for this sector. I think that operating leverage will come through, as also the kind of products that are getting sold are higher ASP products. More SUVs are getting sold in the four-wheeler category. And as a result, there will be margin expansion as we move ahead. To that extent, this doesn't look like a flash in the pan. It looks like a 2 to 5 year kind of a cycle playing out just now. And hence, I would be constructive on this space. Yet, rural spending has not picked up. If that picks up, two-wheeler space will also start looking attractive.
Anshul, just to go back to that point, you said we've been meeting companies at various conferences, etc. Could you give us some color without obviously naming companies? What kind of businesses these are in? Is this largely on existing capacity, or is this a result of adding more capacity over the next couple of years, or new capacity coming on stream? And what are they telling you about, pricing power, demand? One of the things we heard from a lot of companies is that the lower and the entry-level segment across items is kind of slowed meaningfully. Premium segment is doing very well. So just some color would help overall.
Yes, Prashant, we think that it's a mix of many factors. Many companies which have added capacity already are seeing tailwinds on demand, and hence their capacities will get filled in due time. Some companies are at the cusp of commissioning new capacities. They are quite constructive. You were talking about the chemical space. It's unprecedented, the kind of inquiries that people are seeing in the chemical space, and also the capex that this space is seeing. Many companies will add as much gross block as in the next 5 years as they built over the last 50 years. And this is despite the last 2-3 years being extensively, these companies adding to their capex extensively. So this is a space doing very well. Capital goods, new capacities are getting created, and for that, capital goods companies are enhancing their existing capacities and also servicing new requirements as they come through. Banking and finance, the kind of, again, the body language, the growth estimates in that space are something that we have not seen in a really long time, at least 5 to 7 years. And this is across segments within banking and finance. Defense. Defense as an indigenization play. If you speak with some of these companies, they are talking of as much as 3 to 5 times revenue upsides from current levels over the next 3-5 years. That is the kind of tailwind on order booking and on demand that these companies are seeing. So we are seeing general ebullience all across. To your point on the lower segments actually not benefiting so much as the premium segments, that may be true because rural economies, tier 2, tier 3 segments of the market are at this time not as their consumer sentiment is not as strong as the urban economy. But with the rains that have happened this year, we see that also changing. Come the festive season, probably you will see ebullience even in that segment. And imagine all this growth is happening despite that engine of the economy not working. Imagine what will happen if that engine starts working. So we seem to be in a very strong space at this time. And we would be more constructive than not with a 3-5 year time horizon.
Okay. All right. Anshul, a pleasure having you with us here. It's always good to get insights from you. Thanks indeed for joining us here on the program. So Anshul Sehgal with perspective. 112 points on the market. So 17,946, absolutely steady still, although it's come off 20-30 points. But that's par for the course. It's been happening frequently from the morning, but always coming back. But that 100 points not gone, at least the 100 point 3-digit gains have not disappeared. for any point during the course of the day. We'll take a quick break here. We'll come back. We'll get you a quick check on what's happening in dealing rooms in our segment D-Street Chatter with Nimesh. And of course, our technical expert will be back to tell you short-term trading ideas. Buy today, sell tomorrow. Trades coming up as well.
Welcome back. Well, the market's looking quite strong, and it looks like, this 18,000, of course, still a bit elusive, but maybe a gap up can do it. Let's go and ask Nimesh what he's picked up from dealing rooms. Nimesh, hi.
Hi, Anuj. So there is a good momentum for the bulls, but today the big theme is the outperformance in the broader markets. That's where there is a lot of action. In fact, multiple sectors have outperformed today and is helping the broader indices. That's the reason why the Nifty Bank Index is up over 1%. In terms of flows, slightly muted because a couple of the Asian markets are shut today. But there is buying interest from the larger FIs, and within that there is a basket buying in the bank stocks, is what I understand at the leading FI desk. So there is now clear preference towards the banking stocks by the larger institutions. As you rightly pointed out, the next level what dealers are talking about is 18,000 on the Nifty. If that's taken out, you'll probably see a big move towards the all-time highs very soon, maybe in the September series itself. But the momentum is clearly shifted towards to the broader indices, and that's where a lot of sectors have today outperformed and participated in that big mid-cap index move, which is up 1% today.
Okay, Nigel, in terms of in terms of specific stocks, what are you picking up? What's on your list today?
Hi, Prashant. So in terms of individual names, the first stock is Axis Bank. While there is buying interest and a basket buying in the entire banking stocks, Axis Bank stands out in terms of specific buying interest by leading FI desk. So the delivery volumes are expected to be quite high in Axis Bank today. So that's the first one. The second stock is Coal India. In a good market today, that stock is down 3% and there is a lot of chatter and buzz of a possible stake sale from the government coming in very soon, and hence a bit of pressure on that particular stock today. So that's the second one. The third stock is Krishna Medical. Again, a large block, 3% equity has changed hands. Remember, last week we did report about General Atlantic selling a large chunk. Looks like they've sold further 3% stake in today's block deal. So the disclosures will be important, but looks like GA was a large seller in Krishna Medical today. And the last stock is Edelweiss. Again, a mid-cap stock buzzing in trade after a long time. That's coming to my chatter list. Good amount of momentum in terms of buying interest at HNI desk as well. Remember, in Edelweiss, the big trigger for the stock is the final approval for the demerger. Remember, obviously they're going to demerge the few businesses which the private equity has bought into, but still the approvals are pending, and hence a bit of anticipation that can come very soon, and hence there is a bit of buying momentum in Edelweiss today.
Okay, all right, Nimesh, thanks for joining and giving us all of those details. By the way, the markets have slipped a little bit from those highs. It appeared it was going to give a bit of a challenge. The problem is big boy HDFC. That's done a bit of a slippy slide. HDFC and HDFC Bank only pulled both those two stocks up. If it wasn't for them, actually, we would be much closer to around the 18,000 odd mark. Even HDFC Bank, that graph should be more or less identical out there. Moves to the low point of the day. Mitesh Thakkar is with us. Mitesh, we wait for another day. 18,000 should be here sooner rather than later. But I think good things come with patience. So the bulls have to wait for that. Your view on the index as well as a couple of trading calls?
Yes, Nigel. Before that, I forgot to wish you a very happy birthday.
Thank you so much.
Coming to my stock calls, I think I have BTST on Oracle Finance. I think that's another IT name on the radar. That's BTST with a stop just below levels of 2185 for targets of 2250, and a sell call on Rain Industries. That kind of broke down yesterday, hasn't participated today. I think could see some pressure tomorrow. So that's a STBT with a stop at about 188 for targets of 181. And on the index, yes, I think it might take some time getting past 18,000, but I think the directional bias remains on the upside. In fact, any declines like we have had today, and maybe if we get it tomorrow morning, would be good entry points on the index side.
Okay, all right. Thanks for that, Mitesh, and thanks for your good wishes as well. Let's get in Hemang Jani, retail equity analyst Motilal Oswal, who joins us on the show. Hi, Hemang. Good speaking to you as always. I want to ask you about Coal India. That's been a stark underperformer today, and there is this buzz that could be some supply that's coming in there. Remember, things are looking quite good. They're promising big targets on volumes. The globe has gone through a bit of a shortfall on coal, so prices are likely to remain elevated. And receivables have come down as well. More or less, a good mix of events. If in case there is some supply and the stock is under pressure, Do you believe it's a good entry point, or post that big outperformance, you believe that move is done?
Yeah, good afternoon, Nigel. Wish you a very happy birthday. And yeah, Coal India, we have a positive view, and we do think that given the current global scenario and where the world is trying to reduce the dependency from the Russian crude oil, the demand for coal is going to be very strong. And we do think that given the kind of pricing trend that we've seen for the e-auction, though the volume could be a bit lower on the e-auction side, but overall, both in terms of e-auction and the normal, trend which are there, you will see very strong growth coming through for Coal India. So if you have a little bit of a correction because of, some technical event like OFS, I definitely think we should be trying to get into it. Because overall we think that next at least 12 to 18 months are going to be extremely good for Coal India.
Okay, Hemang, good afternoon. We've had more than one opinion on the chemical space, and it seems that things are really looking up once again. So it's China +1 and now it's Europe +1. Seems like it. Any thoughts? What do you like in the space at Motilal?
So clearly there is some action there, but what we must understand, Prashant, is that not all the companies would have enough supply to take advantage of the current pricing scenario which is there. And also the companies which are fully integrated, something like a Deepak Nitrite or Deepak Fertilizer, or to some extent Aarti Industries. These are the companies where you will have some benefit of the current pricing trend which is there. So we have to be very selective about which companies are we really getting into, because there could be a corresponding increase in the raw material prices for many of the companies. And we think that, because of the kind of dynamics which are there at play, particularly from the European side, this scenario may play out, over a longer period of time. So I think Deepak Nitrite is something that we are extremely positive about, and we think that, it can really benefit from the current scenario.
Okay, all right, Hemang. Well, we have lots more to discuss with you. For the time being, we'll slip into a short break. We'll continue with Market Talk with Hemang on the other side. Well, let's get in some market opinion now. Earlier today, we caught up with Gautam Shah, founder and chief strategist at Goldilocks Premium Research, and he says the close above 18,000 for the Nifty will start the next leg of the up move. Let's hear him out.
Even at these levels, there are no real overbought signs. There are no topping out signs. The market looks firm. There is phenomenal relative strength. Participation is great. Momentum on the good days is far better than the bad days. So just about everything suggests that this is a textbook style bull market that will continue. However, I think, as I mentioned last time as well, the index is absolutely irrelevant, because the kind of strength that you're seeing in the broader markets on a daily basis, while the Nifty went through this 3-week consolidation, just tells you that it is still a very bottom-up kind of a market. I think this IT decline is a little overdone without any real materialistic change in fundamentals. We've almost seen a sort of a double bottom. I think this 28,500 area on the IT index was extremely critical, and I'm encouraged with the way the rebound has taken place in the last 2 days. So I think a reversal can happen. But if you have to play this story from a 6 to 12 month perspective, it makes sense to buy here because the downside is limited and the upside potential is about 15 to 20%. The auto index was an underperformer. It found it very difficult to get past some serious resistance levels. A stock like M&M was in a range, for so many years. So once a breakout or a snap out happens, it usually, leads to a gear 5 kind of an activity. So I think there is a lot more upside for stocks like M&M and Maruti, which we continue to like. And even Tata Motors at some point of time should join the party. I think auto ancillary has been on top of our list for a very long time.
Well, I think it's time to, address those flashes that are coming up for you on the screen. There's so space information that's coming in. Government's LPG subsidy bill could go up further. OMCs may be paid additional amounts on higher international product prices. Sapna's picking up all of that. She's joining in to break it up for us and explaining that to us. Sapna.
Hi, Nigel. So this could be possible and also on likely lines. If you look at the the Saudi CP price in the last 2 odd years, and this was data put out by government on Friday itself, those prices are up around 300 odd %. But there is the LPG price in India benchmarked by the Delhi price, for example, that's up by less than 1/10 of that, so less than around 28 odd %. So over a period of time, some kind of under recoveries have also built in on cooking gas per se for OMC. Keeping all of this in mind, it could just be likely that the government may clear some additional subsidy amount. There is already subsidy available for Ujjwala customers, and there was an additional announcement made by the finance minister on 21st May, around 6,100 odd crores and around 5,800 odd crores in the budget. So around 11 to 12,000 crores roughly, they're already looking at that number for the Ujjwala consumers. But this time going forward, probably, the other consumers as well may have to be taken care of. They have been taken care of, and the LPG price divisions have been very calibrated, around 50 odd bucks now and then. So I suppose most of the burden has been borne by the OMC. Keeping all of this in mind, it could just be possible that some additional amounts will be given out on that. We don't really have that number, but broadly, what we had was that basically around the additional tab could be as high as around 25 to 30 odd thousand crores in terms of the LPG subsidy. But I'm sure that the government will look at these numbers once again, and the final number could be slightly on the lower side. But this is what broadly it is. So I think this communication will be going out to OMC pretty soon.
Okay. All right. Sapna, thanks very much. Important story. Hemang, any thoughts with this one? I mean, oil marketing companies, of course, at the center of things is retailers, and there may be additional subsidy coming in as help. Any thoughts?
So Prashant, we are actually staying away from some of these, oil marketing companies and certain PSUs because of the kind of, volatility that we have seen in the crude oil price. And we've also seen some ad hoc steps being taken in terms of, windfall tax on some of these oil companies, be it Reliance, ONGC. So the government policy, seems to be not very transparent or consistent to really have a clarity about the earnings picture. So I think in the current scenario, we would rather go with some of these sectors where, there are clear positive data points, be it banks or, in the mid-cap QSR, hotels, real estate. I think these are the pockets where there is a much more clarity in terms of earnings, and momentum is also really looking quite strong. So that is where the focus would be.
Okay. All right. Thanks so much, Hemang, for joining in and, filling us in with your take on a whole host of stocks. Well, so let's wind things down then. It's been a good trading session. The Nifty goes home with a gain of close to around 100 points. The mid-cap index, keeping in step, was up close to around 1% odd. In fact, that was a big outperformance. The number of stocks advancing way more than the number of stocks that were declining. What did well from the Nifty pack itself? Well, there were quite a few frontline names that did pretty well, and that's the reason why, in fact, the Nifty was up and about. Adani Ports, the stock is on its way to around 1,000 rupees. Titan, quietly that stock has been creeping up. It's moved up more than 10% in less than a month. Tech Mahindra continues to move with strength, up close to around 2%. And Divi's Laboratory as well did see a pretty good move. Tech has come back, and Infosys was a stock that did pretty well. On the flip side, Tree Cement took a break. It was a big outperformer last week. Was down close to around 1.5% after running last week. Coal India as well fears that there is supply that's coming in, so that stock as well did end with a cut of around 2.5%. And the HDFC Twins didn't do the Nifty too many favors. From the broader markets, what did very, very well was HAL. That stock was up 7.5%. Navin Fluorine, Deepak Nitrite, well, they were flying away. ECC and Ambuja Cements, they are ready for the new promoter. Well, both those two stocks did quite well in trade. And on the losing end, you had India Bulls Housing Finance that didn't do very well. So to wind things down then, The Nifty had a solid knock today, up 100 points. The Nifty Bank was a relative underperformer with a gain of around 150 points odd. But the mid-cap index, that's where the party is. The music is playing, the stocks are dancing. And that stock was up. That index, in fact, was up close to around 1% odd. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell. You don't go anywhere. Our Monday special, Money, 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 comes up next.